Good morning. Assalamu alaikum. I would like to welcome you all for the analyst and investor presentation of Al Madina Insurance Company SAOG financial year 2025 H1 results. Joining with me today is our Deputy CEO, Mr. Shakib Mahmood, our Head of Operations, Anish Varghese, and myself, heading the Finance Department as well as the Investor Relations Officer. We have a brief agenda for today. We will start with the company overview, following with the company's past performance snapshot, H1 2025 results, outlook, followed by a Q&A session. We would like to thank MSX for providing us this opportunity to meet and interact with the investors and the analyst community. With this, I would like to hand over the floor to our Deputy CEO, Mr. Shakib Mahmood, to give a brief overview.
Good morning, all. Thank you very much for joining this yearly conference, bi-yearly actually. And as you all know, that this is very important platform where we talk to our investors and the analysts, etc. It's a very good initiative which MSX started a few years ago. I would take you through, because many of you would be the new listeners and new joiners, take you through the company's vision, mission, and values. Although the people who follow us and who have been attending these conferences would know that the vision of our company is to become a leading insurance company in Sultanate of Oman. And leading meaning in all spheres: profitability for these stakeholders, satisfaction for the customers, and commitment to our employees. And I'll tell you how we have achieved that already. And I want to emphasize here, it's an insurance company, not the takaful company. So we want to be a leader in the entire industry space, not only in takaful, because takaful, there are only two companies. So one has to be first anyway. Our mission is to provide cost-effective insurance and provide you superior customer services with good solutions which are in compliance with Sharia. Because we are takaful, every bit of it, every breath which we take is Sharia compliant in the company. And when I say cost effective, I do not mean cheap. It has to be cost effective, it has to be competitive, but it cannot be cheap because we are Sharia compliant, we have our own limitations, and that we have to comply with. So if you have to do something good, you have to pay a little bit more price. Our values are innovation. We're always thinking of new products, social responsibility to our societies and our people, transparency in whatever we do. Integrity is very, very important cornerstone of our values, and teamwork. So these are our values. If any of you would want to know more about it or ask me to say something, explain it to you, I'm very happy to stop and do it. Otherwise, there's a Q&A session in the end, and you can ask your questions at that time. The journey of Al Madina Insurance Company or Al Madina Takaful is that we were established in 2006 in Oman as a conventional insurer. And then the investors decided to convert into a fully fledged Takaful industry of the company in 2014. With a mix of products right from general health, family, etc., under the Sharia principles. Al Madina has now grown to become a $134 million company, the top line, and we are number 4 in terms of the insurance industry. Sometimes we are 3, sometimes we are 4, and we are not a company which just want to grow the top line. I've been telling this to our investors all through. We focus on the profitability, our ability to pay dividends continuously to our shareholders, give value to our participant funds, and we don't want the participant to go into the losses. We want to maintain a nice balance between participants and the shareholders. We have a very balanced portfolio. Primarily, we are corporate insurer, government businesses, as well as personal lines. We have 7 branches. 2 kiosks across Sultanate of Oman. And we recently have shifted into a new office, which is just behind the Grand Mall. You will see a big board there, Al Madina Takaful. And all departments have been brought in under one roof to bring in the synergies in operations. This is the first Takaful company ever in Sultanate of Oman. And there are lots of first ever in the industry which we have done. And I'll briefly touch upon that. We are a 17.5 million Real money capital company, whereas the requirement is only 10 million. So the shareholders decided to put in more money in there to protect if there is a problem tomorrow with the participants. Because the concept of takaful is that you are holding the money of the participant in WAF, and you are the custodians. You want them to prosper, and there is a possibility if tomorrow the participants are in profits, that each insurer can get something back, because this is the money which is held in trust, and it's not something which will go into the pockets of the shareholders. So that's the major difference between a takaful company and an insurance company, conventional insurance company. And when I'm talking about first, we recently got an award which Anish, our head of operation, will cover later on, as the best insurance player in Oman. Not takaful, best insurance player. So the insurance company of the year 2020-25. And when I got to the stage and I thought why we are getting this award and why not many other big sharks who were there, or big companies. I cut that shark comment. Because I thought to myself when I said on the stage that we have done so many firsts in this industry. And some of those are that we are the first takaful company. We are the first takaful company to have participant funds in profitability. Otherwise, others in the region also are in losses, because what typically people do, that participant fund that have all the losses, transfer the wakala fees to the shareholders and start thinking that they are profitable. But we have maintained the balance. We are the first. First in paying dividends, and first in paying dividend continuously for 9 years, otherwise 10 years. First in client service for last 3 years, and this is a survey done by a London-based international broker, and it showed that we are by far the best in 16 parameters of client service in the industry. I'm not talking about takaful. First gold accredited company in ESG from UK-based organization. We were the first to publish the ESG report last year, 2024. When it was not even mandatory for the insurance industry. So we were the first in there. First to sign an agreement with Oman Post ever in the history of Oman, and the Sanad offices, which is across the Oman, 26,000 offices they have. They will start selling, and some of them already started selling our products and give services to our customers. So we are the first in there. And we are also first in terms of one of the values is to be careful with our people, teamwork, etc., and social responsibility. We are the first to allow our, I don't think any other company does that in Oman, allow our female employees who have children, who are nursing children below 7 years of age, to work only 6 hours a day and go 2:30 to their home. When I say 6 hours a day, it does not mean they do not work from home. They take work home, they do off-location work, but they are in office till about 2:30, and they're allowed to go. No eyebrows are raised. So we take care of our people, and that's why our turnover is very, very low in the company. Anybody who has worked with us want to be with us. Who goes out, he wants to come back. A lot of people have gone out in the industry and they want to come back. So I have a full list of people who are in wait list. They want to come back. The last is that we are 19 years, including the conventional part of it, and we are still evolving, it's still growing, because if you stop growing, then that means you're dead. So that's about the company. Anybody has any questions? I'm happy to take it now or later. Now this graph shows our growth pattern. If you see, the Manhattans or the buildings are growing taller and taller and taller. From 2007, where we were only 3.8 million, we have crossed 51.5 million in 2024. And hopefully in 2025, if everything goes right, we will be touching 54 million easily. So this is the top line. And as I said to you, that we do not underwrite everything. We reject so many things which we believe are not the good risk, which will not give us profits. and it'll be a losing proposition, then we let it go. Otherwise, it's very easy to grow in the top line. You start accepting everything and you become 100 million maybe. Move on. We are in the business of risk management and mitigation of risk transfer, as you all understand, but we foster harmony with all our stakeholders. When I say all stakeholders, meaning the participant, the shareholder, the clients, the employees. The company is engaged in the business of general family takaful activities, and we do investment adopting Wakala and Mudarba models aligned with Islamic Sharia principle. We are the largest, if not the largest, one of the largest energy, power, and corporate insurance in the market. Insurer in the market. Why I said one of the largest? Because some year we are number one, some year we are number two. So it's one of the largest. Build customer loyalty through exceptional experiences. Most our clients continue with us. The bigger clients also. They like our service so much that they don't want to go elsewhere, even though we are a few bezas expensive here and there. We are a leading, okay. We are the leader in takaful provider and partner with major Islamic banks in Oman. Wealth of experience in effective managing diverse clientele and multiple industry because the team is stable. And among us, we have more than 150 years of experience in Oman, in India, and in Europe with the underwriters and the risk adjusters. So the qualified team and handlers are very, very experienced. And that's probably the key word for us in terms of our successes. Stable, long-standing experience. I think I've talked about it. Claim services and international best practices we always adopt immediately, and we err towards the the hard side. Some of the other in the industry, you will see their numbers will change towards the year end after the audit is done. We read through the international standard, we read through the IOFI, we take the help of the IOFI experts. I myself sit into various roundtable conferences of IOFI. One of the conference, they asked us to actually put Al Madina Takaful's logo in there and sponsor without paying anything because we contributed so much at the IOFI board level, which was a global conference. It was done in the month of April, I think. And I started that and I concluded that, I meaning Al Madina, because Al Madina is contributing so much in the Takaful space that they allowed me as the representative on that particular conference. Actuarial validation and reserve in line with the best industry practices. Now the validation, because all of you know, this is IFRS 17, which came into the insurance industry 2 years ago. But in Takaful, the equivalent standard, which is called FAS 42, FAS 43, has just come last year. So from this year onward, 1st January onward, this has been implemented. And hence, as a result, we need at least 2 actuaries. One actually does our validation of the reserve. The other converts the number of IFRS 4 or earlier standard equivalent to the new standard. And why they do this? Because there's no system available for Takaful industry right now where you can put in the number and numbers are churned. And same situation continues in most of the conventional companies also, because nobody in Oman, or at least large number of them, don't have their own system. So our numbers go through 2 international actuaries before it comes to you. And we make sure that even our quarterly numbers are vetted by both of them. Then only we come into the public. Because our reputation is that once we put the number, we do not want any change. And this has been the practice in the past. We want to continue with the new standard as well. Although most of you would know it's a very, very complicated standard. Everybody is learning about it, and it took about 20 years for the standard setter to come up with this standard. And to put in perspective, all these standards is one book. There are about 45 to 50 standards in international accounting standard. There's just one book for that. And for this one standard, a book is thicker than that. bigger than that, all 50 on one side. And then implementation guidelines are even more. And we are talking not only about international accounting standard, we are talking about now IOF standard. So we are following the IOF, the regulation of CMA, the commercial company law, the corporate governance law, and the solvency margin law, etc. So we have multiple things to look into, and Sharia standard as well. Please go on. We believe in country value, so most of the things we keep inside the country. We do not want this to go outside, although many of our oil and gas sector has to do this because they do their insurance arrangement outside of Oman directly with some company. And there is only a fronting company in here, which we have raised with the in-country value authorities and the Ministry of Oil and Gas sector, energy. Al Madina maintains a legally mandated Omanization percentage. Actually, we are above that. We recruit and train Omani nationals on a regular basis. We provide them training, even though we don't have place to absorb them. Take them as a trainee, hone them, and then they can join wherever they want. We also have a leadership program where we engage a consultant who evaluates our existing Omani people every time we nominate 4 or 5, see their personalities, how they do it, the classroom, the online, the case studies, etc., and then score them and give them a plan of action, how they can develop themselves. And many of our Omanis have come up very, very well in that thing. We have promoted them to senior managers, regional managers, etc. Business retention mostly in Oman, providing ICB through CSR. So all CSR activities are in here. 85% of our investment, total investment, are within Oman. We do not go outside, even though we may get a few percentage more or less here and there. If we go to outside, we try to be in Oman as much as possible. This is the past performance snapshot, how we have done. If you have been tracing us, and I've talked about it quite a bit, I don't want to keep on beating it. We have always been paying dividend from 2014 to now 2024. And if you see, it will come somewhere around 7%. We have returned 64.5% of the capital to the shareholder already by paying them dividends. And this does not mean, I want to reiterate it, say it again, this does not mean that we are giving losses to our participant fund. Our participant fund is healthy, it's in profit. And then shareholders are getting their dividend. So that's a very fine balance, very difficult to maintain in the couple industry, but we have been doing it. And sometime I say our yield is better than the best yield in Oman because the share prices do not move. So you're getting 84, 86 Beza share, and you're getting 7% on that 100 Beza face value. Then your effective return comes to 8.5. Whereas if you see bigger banks are paying 15% dividend, and their share is 300 Beza or 250 Beza, so you are getting effective 5% yield on that. But irrespective of that, the share doesn't move because maybe it's very closely held. Maybe people do not want to go out of our company for whatever reason. But that's something for the analysts to look into and educate their investors. So far, the company has paid out 11.2 million in dividends, and our capital is 17 million. I want to bring it to your notice, people who have just start following us or looking into our numbers. Before 2014, this company was a loss-making company, and we had to write down our capital by 5 million against accumulated losses. That was the situation. And we had accumulated losses in participant fund about 6.5 million in 2019. 6.5 million. And that we have completely wiped off. This chart shows that. And come into positive even in the participant fund. So you see participant fund, my right-hand side graph shows you the negative. The graph downwards is negative. So 6.2 was in 2019. From there, we started jumping 500,000 and 400, and now we are 277,000 positive. And this, you see, is not a, is a blip, one-time thing. We have systematically reduced it. So it's not only paying out the dividends to the shareholders, it's managing the participant fund in such a way that they have come into positive. And inshallah, if the new standard IFRS 17, etc., allows us, because the standard has various other things in terms of recording the premiums and the profitability. And if the company remains in the same situation, then we will soon reach at a stage where we will have to, or we will decide to pay something back to the participant as well. Now, this is all from me. If you want to know anything further, and I keep bumping in when my colleagues are talking about it, in your question answer session, I'm available. Let me know if you have any questions. I'll ask my head of finance to take you through the results for the H1 2025 and how this looks into the new standard from the old one. Because most of you are aware of IFRS 17, so I would like to replace the name FAS 42, 43 with IFRS 17 so that you know what we are talking about, because FAS is not known to many. Unfortunately, to auditors, to regulators, it's a new animal. But it's the equivalent of IFRS 17. What the IOP has done is it's picked up IFRS 17, made it Sharia compliant, changed terminology to suit the Sharia, and come up with two standards. So one is the accounting, the other is the presentation. We call it FAS 42, 43, but for discussion purposes, we will use here IFRS 17. Hitesh, carry on.
Thank you, Mr. Shakib. Al Madina achieves another successful quarter of financial performance. The company reported gross contribution of 23 million. With our focused sales strategy, we ensured that our recognized takaful contribution grew from 18.9 million to 20 million. Our underwriting results were recorded at 4.2 million. As a result of which, the surplus in the participant fund from a deficit of 413 corresponding period has increased to a 20,000 surplus in H1 2025. The investment income of the company has also grown significantly from 852 to 1.1 million. Profit after tax of shareholder fund has been maintained at around 813, has come down slightly on account of change in the wakala fee methodology. The overall profit after tax on the combined level has increased from 816 to 833. Now, if we were to report our results as per the previous standard, our profitability would have been around 1.7 million. This is mainly coming on account of various adjustments and the changes in the accounting methodology on the implementation of the new standard, like certain things were deferred earlier, like deferment of wakala fees, acquisition costs, which were being deferred earlier, are not being allowed to be deferred as per the new standard. There has been a change in the actuarial reserving and methodology, like risk adjustments are being applied, plus discounting. So all in all together, the numbers have been moving from the previous standard.
So I will make it easier for people to understand. Because all this is good for accountants. We understand this very, very clearly. But people who are just listening or not accountants, this chart which Hitesh is meticulously put up, the surplus participant fund, takaful fund, shows 400 loss to 20,000 profit. So it's a journey from 400 to 20. So you can say 425,000 positive there. Correct? Yes. It was a loss. Now it has become a profit. Yes. Come down. See the profit after tax shareholder fund. There was a profit 1.2 million last year. Now it has come down to 830. That means 400,000 adrift, negative here. What's happening? Very easy. The 400,000 from which is given there is taken away from the shareholders. That's what's happening. Nothing else. See, accounting can create a jugglery. It cannot take the number away from anywhere. 400, which is taken from the shareholders, it is put in the participant fund. So this is numbers have not disappeared anywhere. Numbers have not gone anywhere. They're just how they are recognizing the numbers. And why this is happening, before I come to the gray one, why this is happening? Because wakala fees, which is a charge or an expense for the participant fund, is being now deferred. in the participant fund, i.e. you will take the wakala fee and spread over the life of the insurance policies. So they are getting a lesser charge, hence the benefit. Whereas you come to the shareholder fund, there they cannot recognize the wakala fees immediately. So they have to defer also. So there was an income that reduces and it goes to the future period. The other is to match the accounting matching principle, whatever was the acquisition cost earlier, that was also deferred with the wakala fees. Now the new standard says, no. Expenses you have to take immediately, incomes you have to defer. So expense have come fully into shareholder fund. Income which they had to recognize has been deferred. And that's the reason that 400 difference here and 400 positive there is explainable. The others don't get into the logic and the discounting and risk factor, etc. That is for accountants to understand. That is a different methodology under this standard, which Hitesh very nicely explained, causes some heartache to the industry. But what happens? No standard create a new number or take away your numbers. This is only in which period you are recognizing it. So the new standard is saying recognize over a period of your life of the policy. Some policies, for example, the family or life policies are for 10 years, 15 years, 20 years. So a portion will be a portion on that life. A similar standard, if you all know about the International Accounting Standard, was there for construction contracts, but not for any other this thing. So it's similar lines. So ultimately, in a year and a half cycle, the old standard and new standard numbers will catch up. Because now you're deferring something delaying. But when you go into the next period, you will be having something to release also. Release and delay will match. New standard show that if we were to continue under the old standard, then we are performing so well that we have exceeded last whole year profit. Last year it was 1.4 million. The entire year profit, 12 months profit. We have done already 1.7 million in 6 months. So we would be laughing to the bank and the shareholders would be happy with the kind of dividend could have been paid by the old standard. But unfortunately, the new standard spread the income over, as I explained to you, life of the policies. So the new standard shows 833 as the profit right now as compared to 816 last year. So the jump which we did in the profitability, if we had not done it, then we would be showing you zero profit probably or 10,000 profit. And these numbers are weighted by two actuaries, looked into by our external auditors. So dependable numbers. Hitesh.
Yeah. Moving on to the company's gross contribution mix. The gross contribution as of H1 2025 is 23.2 million. The company has a diversified line of business portfolio, with the majority of the business being from technical line of business, followed by motor, family, and medical. The company, as per their strategy, has thought through and increases their retention in motor and family in H1 2025, in line with the strategy adopted by the board. Moving on to the key performance indicators, the company has started a strategy where they've started retaining more on the profitable line of business, due to which you can see the increase in the retention ratio from 39 to 44%. Various cost control, claim control measures have been adopted by companies, our company's claim department, which is resulting in our loss ratios decline from 66 to 63%. The expense ratio of the company has also come down from 33 to 31%. As a result of which, the company has been able to maintain a healthy combined ratio, I would say, at 94%, as compared to 99%, which was corresponding period.
So I want to add one comment in here. One, these numbers are as per the new standard.
Yes.
And not the old standard numbers, because many competitors continues to do these ratios on the old standard number, the new numbers. Secondly, the loss ratio has gone down from 66 to 63%, which is quite a decrease. This despite that we do not hold up anybody's payment of the claim. We do not unduly say, oh, this is not claimable, or we will not pay it, because some of the other industry players have huge amount of claims outstanding with them. We take pride in settling and doing client service, and that's why we are number one in client service. Combined ratio, Hitesh said 44 is a healthy. I would say it's a very, very healthy ratio, and I do not think we will be able to maintain this till the year end, because such kind of ratios in the insurance industry is not really heard of. So this will taper upward, but will still be healthy.
With regard to the investment composition, Al Madina continues to follow a prudent investment strategy, with having majority of the investments in the fixed income space. We have 15% in equities, 14% in equities, and 15% in real estate. The investment portfolio of the company has grown by 11%, whereas the investment income of the company has grown by 28%, reaching to 1 million at the half-year mark already. As compared to the industry, AMI performance has been number 3 in terms of year-on-year growth on the investment income. We ensure that all our investments are constantly monitored for Sharia compliance, and even despite the challenges in the Sharia space with regard to the returns and the opportunities, we still continue to increase our portfolio and the returns for the shareholders and the participant funds. The company's balance sheet continues to remain robust, with adequate capital buffers and sufficient liquidity. The total assets of the company has grown to 93.2 million, whereas the liabilities are already at 69.5. The share capital of the company is well above the minimum requirement of 10 million at 17.5 million. The total shareholders' equity is 19.4 million. The overall accumulated surplus is 2.9 million. The net assets attributable to the shareholders as of H1 2025 is 0.111 paisa. In terms of solvency, I'm happy to say that company continues to maintain its solvency in all line of business in terms of FSA risk-based solvency requirement. Even our solvency is well above the requirement of the minimum regulatory by 5.6 million as of 2024.
I think there's a very interesting number here, which I want to comment. The net asset value per share is 111 paisa. So if you go by the net asset, the share should at least trade at 111 paisa. A company which is giving you 10-year dividend, giving you 8.5% yield, or in absolute terms 7% dividend. The 84 paisa or 86 paisa, I fail to understand how the market mechanism work in Oman, and my analyst colleagues should tell me and educate people that why these companies' share prices are not moving upward. Are people not looking into it, or there's no availability of the shares in the market? I think thank you very much. Hitesh has come to an end of his presentation. The outlook about the industry and various other aspects, I will ask our head of operation, Anish Varghese, who is traveling, but he is dialing in from outside Oman. He will take you through on that.
Hi, good morning once again. Now, as we have seen the past performance of the company, we have very positive outlook for the upcoming period. Now, insurance sector is poised for a stable growth due to various government reforms and favorable oil prices. We have seen that many major projects been awarded and it started in the past period. Even Al Madina also got or won many insurance of such a project, many infrastructure project, many power sector project, and even the solar power plant. So we have seen a lot of new projects are coming to the market. So that will boost insurance sector as well. Another point is now FSA, the regulator, they're categorizing all insurers and giving license for the medical insurance. And basically, they are categorizing all insurers by category A and category B. Category A insurers will be able to issue the policies, whereas category B insurers can take a co-insurance share on the policies only. So where category A, who gets category A license, they will get a better opportunity in the market to boost their health insurance segment. Now, when we comes to the plan on our product, now very soon we expect that FSA will implement compulsory health insurance in the market. If everything goes well, we expect compulsory health insurance will be implemented in the towards end of the year itself, which will further boost health insurance segment of Almadina. Then on top of that, Almadina is in the final stage of implementation of our in-house medical claim management team, which will create or which will help us to grow in our health insurance segment on one side, and on the other side it will help us to increase our profitability from health insurance segment. Although Almadina is one of the very limited insurance companies who is generating profit even under the health insurance segment. Then Almadina is focused on product innovation and again reinsurance structuring appropriately to protect its capital, then diversified distribution channel and cost management with the ultimate aim of generating higher profitability. To elevate our customer service experience, we remain committed in investing on various IT upgrade projects. Maybe we can say that our retail system is one of the best in the market. Within less than 1 minute, we can issue retail policies by taking all the informations automatically. So we have invested a lot in our digital segment as well to give a better experience to our customers. When it comes to the strategy, Almadina's strategy is centered on achieving profitability by implementing effective underwriting practices and optimizing reinsurance structures and effective cost management measures. Our aim is to generate a higher profitability while growing in its market share as well. We will prioritize stability and sustainable growth with a continued focus on enhancing our bottom line. Then, regarding other strategy actions, Almadina have planned to enhance its reach and visibility through opening of kiosks and agencies at various strategic locations across Oman. Now, our main focus or main strategy is to achieve the budgeted results for 2025 through all the strategic planning and execution in order to ensure a successful delivery of the expected outcome to all our stakeholders and ensure the profitability growth while maintaining our market position. Now, as our Deputy CEO, Mr. Shakir Mahmood mentioned, Almadina won Insurance Company of the Year just last month. And this is combined across all the insurance industry. It consists of both conventional and the takaful segment. And this is a reward for our operational efficiency and being first among all the operational or key operational parameters. Small. As we mentioned earlier, Almadina, we got a category A health insurance license, which will help us to grow more on the health insurance segment. And it is our privilege to say that Almadina is as of now, only 3 insurance company got a category A medical insurance license. And Almadina is the one among this first insurance company got a category A medical license. Although the companies do maybe more GWP in medical, still they are struggling to get a category A medical license. And for some companies already their application been rejected by FSA because this license is given based on various scrutiny such as our solvency, our financial strength in the market, our operational efficiency, and our system capability, and depends on various parameters. So this also shows Al-Madina's focused strategy and capability across all the operational parameters. Now, I'd be happy to answer any of your questions. Otherwise, then,
Now the floor is open for a Q&A session. If anyone has any questions, please introduce yourself first and go ahead with the question. We'll be happy to answer it.
No questions. I think this is the first time I'm attending this interaction with the investors and analysts where nobody's asking any questions. Seems our presentation was very lucid and easy to understand, I hope. And if there are no questions,
Then we can end the session. Thank you for joining us today and have a nice day.